Okay, welcome back everyone. Let's see how this goes. So, we haven't done a YouTube video in a while, but I thought we'd do one. As you can see, it's sort of just a random video. I'm just going to go over earnings plays. So, what I think of the earnings so far and then what's coming up next week. If you guys enjoy this, let me know and I'll keep doing these every week. Otherwise, I might go back to doing the old format where we discuss random things from like companies, macroeconomic issues, that sort of stuff. But we'll see how this goes for now. If you enjoy this, we also might do a weekly recap in a video format just for you to like listen on the way home or something. So yeah, this is what this sort of video will be like. Nothing going to change in the graphics. I'm not going to bring up like fancy charts for the companies or anything. You can do that on the side if you want and follow along. But once again, it's up to you. So to start with, we already had the earnings, and I'll just quickly go over for quite a few companies. So we had CIMIC with the hilarious code CIM. Ha ha ha. They had good earnings, but that was more or less to be expected. They have had quite a few issues lately, but they have been getting more contracts. So that's one if you want exposure to industrials, you can get it. But I personally have Dow, which we'll cover a bit later in the mock. So yeah, it's personal preference. Next was Rio Tinto. Rio Tinto was one I did a play on for earnings. Seems pretty safe because at the time commodities were flying. As we know now, they're sort of fading a little bit, so bit of an issue. But yeah, commodities were flying, so it's pretty straightforward. We didn't really have any issues at all. The next one was Janus Henderson. I have never looked into, to be honest. It says financials, so automatic cross. Don't really care about them. PointsBet, I have not had a look at actually. I might pull them up now while we're going over it. I have ComSec on the side here. I'm organized as always. I noticed they're doing a cap raising where they're offering $8 shares, so clearly they're expecting more growth, but the issue is how the market's going to perceive it. They were up 4% Friday, so clearly they're doing all right. So I'm guessing the results were quite good. I'm not a fan of these gambling companies. Goldman Sachs have them put out as a recommendation at a buy at $14.90 for a target price over the next year, which is quite high. I think PointsBet are one that benefit largely from, if you look at it in terms of a COVID lockdown perspective, PointsBet are one that do really well from the COVID lockdown. So in that sense, you could buy PointsBet. Um, yeah, not a company I'm a big fan of. Next one we have on the calendar was Bunnings Warehouse Property Trust. Not really interested. That's boomer level if you really want something safe and diverse in terms of real estate. Separate to the actual Bunnings company, so make sure you look it up and at least understand it. The next one, which came out on Wednesday, was Genworth Mortgage Insurance, another one I had a play on. This one was pretty simple. So real estate's done well. So the way to look at this is Genworth Mortgage Insurance does well, presuming people can't afford the 20% deposit and then they have to take out mortgage insurance. The issue they have, and they had last year, was that you had all these government memorandums and stuff coming in, which were blocking people from having to pay back mortgages, getting kicked out, so on and so on. And so a lot of their revenue was halted. And the good thing was the claims were down, but yeah, revenue was halted. So last year they really struggled. So this year I was more or less just betting that they were going to do well and the recovery was going to be good, which it was. This seemed like a really low risk because the stock also recently dropped around 10% on the notice that Commonwealth Bank might not be renewing their deal. Now, if Commonwealth Bank doesn't renew their deal with Genworth Mortgage Insurance, then Genworth lose, I think it's about 20% of their profit. I think it's like 40% of their revenue. They lose quite a big chunk. I still think the company will be fine without it. They did lose an NAB deal a couple of years ago, so it's risky play going ahead, but who knows what will happen. They reckon they'll have a proposal out for Commonwealth Bank within the end of the year, so we'll see what happens. Calendar year, not financial year, that's still a while away. Next is ResMed. I didn't look at ResMed. I'll quickly pull them up because I'm organized. As I said, this is one to listen to on the drive home. I've got my camera on just for any of you who just want to stare at my ugly face occasionally, but I'm mostly just going to be looking at companies. ResMed, they did well, okay. Surprise, surprise, healthcare did well during the COVID lockdown. So ResMed, I haven't looked at them too often, so they seem to be more tech focused on the side of healthcare. Goldman Sachs have them as a hold at $28.40. They're currently $37.27. Woo, that chart has flown up. Oh my goodness. Since what? May 18th, when it was $25, they're now almost $40. Not bad to anyone who's bought into them. Well done, well done. Certainly not one I own. All right, next was REA. REA is one I didn't buy for earnings. Now you might be thinking, well, we bought Genworth Mortgage Insurance. Why not just buy REA? They're both property, essentially, correct. REA, for anyone who doesn't know, is just realestate.com.au. That's their main service. They bill themselves as more diverse, but that's their, I think it's like 80% of their revenue comes from realestate.com.au. But anyway, so I didn't buy them because the stock has run extremely hard. If you compare the charts from GMA to REA, they're two completely different charts. GMA has trended downwards because they struggled last year. REA didn't have the issues that GMA was having because people were still looking for rentals and so on and so on. So REA has really grown and done extremely well. The problem you have now, and the reason why the stock went down on earnings, is where do they go from here? And that's sort of the issue. If you think property is going to go up the next year, you could buy them. If you think property is not going to do too good, which I don't think it will, then yeah, I don't see the reason to buy them. But once again, it's up to you what sort of exposure you want. So now we'll get on to the next one. So on the right, you'll see I have more earnings players listed, and then in the middle is Comsex ones. Now Comsex aren't too detailed, and then I have some more on the right. I'm not going to say where I got the ones on the right from because it's behind a paywall. So shh. But anyway, so first up is Horizon Holdings. Horizon have quite a bit of exposure to coal, is what I was looking at. They did really good on Friday. I think they were up like around 4% on Friday. So clearly, the market's expecting good results. I agree because coal price has flown up lately. This is along with South 32. So yeah, there's another one you can buy if you want. Next is Suncorp Bank. Yeah, I mean, what do you want me to say? It's a bank. It'd be interesting to see. I guess the only real interesting thing to see out of this is if they're going to be announcing a share buyback. The major banks are announcing share buybacks, but the issue with this is that they're announcing share buybacks because they have excess capital, not because the share price is discounted, which as an investor is good short term, but long term it's not a great use of cash. If you imagine you have a lemonade stand and your lemonade stand's worth more than you think it is, you'd rather use your money to buy more lemonade stands and expand. The problem here for the major banks is they don't really have anything to use their excess cash on. And because they're public, they have all this pressure from investors, analysts, all these other financial investment companies to put the cash to use and do something with it. What do you do? There's not much for them to do. If you want a like macroeconomic example of this, you could look at Japan and how their companies hold cash, but yeah, bit of something completely different. And the last one on Comsec's calendar for Monday is Transurban Group. Transurban do road tolls, so all the tolls, well, I don't know how many actually go through them. I looked at them briefly during the COVID crash. I actually bought puts on them and then that went to shit, so don't follow my advice. So yeah, Transurban's another one that you can look into. Tolling, not something I'm interested in. Then we have on the side, the other last one is Charter Hall Long Whale. All right, let me pull this up because I have no idea what they do. As you can see, very organized. All right, Charter Hall Long Whale manage a wide variety of listed and unlisted property funds. Ugh, ugh, spit on that. Not interested. All right, property fund management. If you're into that, go ahead. Me personally, not really. So that's Monday's earnings. So Tuesday we have Challenger. Challenger's financials. Another, yeah, not really interesting. Not a bank. Yeah, just yeah, another financial company reporting. The more interesting one will be Megaport One. Now, if you have followed me long enough, you'll know I bought NXT at around $12 and sold like $10.50, and that went to shit. They're the biggest loss in the mock portfolio as well, so they haven't done very good. The problem you have with Megaport One, the reason I bought NXT over Megaport One is NXT is very data center focused. Megaport One's very diverse. If you want something diverse, Megaport One's good because they're also global. So if you can get something global, then it's good. As I'm reading now, estimated net profit after tax is negative 48 million. That doesn't surprise me because they're constantly focused on expanding. Megaport have deals though with who's the one Bill Gates run? Windows. Yeah, anyway, long day. So Windows, they have deals with Amazon and so on and so on. So they have deals with major companies. So if you want someone to look at, there's another one, especially in the tech space. And if we look on the side, you have ComputerShare. ComputerShare are one that the only reason I know them was because I think there was a short company that came out on from China a couple of years ago, and they basically put out this article. I think it was with no, it might have been with WiseTech. Anyway, I get them mixed up. They're a tech company. I don't really keep up with tech companies. It's too complicated for me because tech's always changing. So rather than me give an opinion and pretending I know what I'm saying, I'm just not going to give one, and then I'll let you research it because everyone seems to be in tech lately. Next one after that is James Hardy Industries. What do they do? Oh, cement, sliding, and buckerboard. Okay, so essentially just residential construction. Yeah. All right. All right. I'm gonna expect them to do well, but they have run really hard over the past year. They've gone up from $30 to $48. Yowza! Holy shit. Okay. PE of 41, price to book of 15, so quite expensive. Morningstar Premium, have them as a sell, and $31 price target. Yeah, no one cares about Morningstar Premium though, do we? All right. Yeah, very interesting. Not one I'm too interested in, so yeah, it's up to you. If you're into the property and you want more property exposure, they're probably going to do well for results, but yeah, I think the result, they might have run a bit hard. And then the next one, according to my source, not that I should know this, is Recon Limited. Only worth 111 million. Provider of software for accounting and bookkeeping. If you want accounting and bookkeeping exposure, I think Kelly Partners is probably the best small one, and then you got Zero in terms of the best big one. So it's up to you. Not a company I'm going to look at, especially not for earnings. They're way too small. Then we have Charter Hall Social Infrastructure REIT. Not interested in REITs, and then a mining company. And most of you should know my opinion on mining. Ugh, spit on that. So not one I'm interested in again. So we'll skip that. Then we get on to Thursdays. Oh, well, I should say not Thursdays. We're on to Wednesdays. We're getting a bit far ahead, eh? So we have Insurance Australia. Yeah, I don't think they would have done too well. So maybe. I don't think insurance in general would have done too well over the past year with the COVID thing. They would have had a lot of claims to pay out. I don't know what specifically IAG insure, but yeah, that's another one. Then we have Commonwealth Bank results. Commonwealth Bank results I think will be fine because they're expected to announce a buyback once again because they have excess cash. So when they bring out their results, the first thing I want to see is their cash position. So the reason all these banks have excess cash, by the way, is they raised all this money because of COVID and they were worried about lockdowns. And now because we've had this V-shaped recovery in the economy, whether or not V enough, V-ish shape, there we go, we'll go with that. Because we've had that recovery, Commonwealth Bank are more or less expected to have out all this cash from the cap raising that they don't really need. So what they do with the cash is another thing. Whether you get a fancy dividend or they'll just buy back shares like ANZ and NAB have announced, who knows? And then we have on the side, we have a few smaller companies. We have CNI, Centuria Capital, Mineral Resources, Alliance A and Alliance Aviation. So companies I know nothing about, have not looked at, and are quite small, I believe. So if you want to do some research and looking at earnings plays, there's some more options. But next we come on to Thursday, and this is going to be funny. We have AMP. Anyone who wants a financial company and you want to see some dodgy history, just look at AMP and look at their long-term share price chart. Their 10-year chart is disgusting. It's I said I got salmonella the other night. AMP is like getting salmonella, but just week after week. It's not pretty. Next we have Downer. So Dow actually own in the mock portfolio, and that's because they do travel infrastructure. So you're like railways, roads, all that sort of stuff. They're sort of a part of. So that's why I hold them. I'm expecting them to do quite well, but we'll see. Because I know that's how the government wants to get the economy going again. So that's why I bought Dow over someone like CIMIC. CIMIC at the time were trading at quite a higher premium, but yeah, they eventually fell off a cliff. And by that time, I was like, oh, I'm already holding Dow, too late. Then we have Telstra. All right, yeah. Never been a big fan of Telstra. The reason I'm not a fan of Telstra is because when we had the COVID stuff and we had those issues, Telstra came out and said we expect to get bouncing back by about 2022, 2023 at the earliest. If you think of it that way, then the share price rise as of 2021 isn't really justified, and there's no reason to buy them in unless you're thinking of a 1-2 year hold. But even then, you're pushing it. Then we have AGL Energy, who I've never really looked at, and expecting a $2.1 billion loss. That automatically does not make me want to consider them for an earnings play. So for earnings play, I typically go with companies with positive results or expecting positive results, not companies that are, going down to shit. Then we have Mirvac Group, real estate, ugh, no one cares. Goodman Group, ugh, real estate, no one cares. And then last but not least, QBE, which is insurance. If you're interested in doing an earnings play, QBE would be a nice one to look at if you've looked at IAG, Insurance Australia. This is because I expect them to do fairly similar. So if the market has a good reaction to IAG, I expect QBE will go up that day as well. Whether or not I'm correct is another thing. And then if we look to the side, what else do we have? Where are we Thursday? ANZ first quarter update. Yeah, I think they would have done well. We got all the mortgages and stuff going through them. They probably did fine. And QBE, as we already mentioned. And then Friday, the last two to finish us off are Baylor Technology Investments, which are financial, so I'm just guessing they invest in technology companies. And one of my old favorites, Baby Bunting Group. So Baby Bunting Group, I looked at them when they were $2.20. And then I was like, why is this retail company so fancy? So I ended up asking my mum, I'm like, did you ever use Baby Bunting Group? Why are they popular? Do they have any competition? Blah, 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 blah. And she's like, they're just another baby store, nothing fancy. The share price has exploded if I quickly pull it up. Share price up to $5.95. It's almost 3 times the investment I would have made, presuming I bought Baby Bunting at $2.20 when I looked at them a couple years ago. But yeah, they've really done well because of the retail boom, because of COVID, which is hard to predict, but also props to management. Management have done really, really good with them. So well done to them. So I know this is a bit of a longer video. This is already hitting about 15 minutes. So thank you guys for watching. If you enjoyed these longer videos, let me know, and I'll do another one next week because we have a shit ton more earnings plays next week. If I quickly show you, we got a bunch. So this is Mondays, and then Tuesdays, and yeah, as you can see, the week just goes on and on and on. So that's week 3. So if you enjoyed this one, let me know, and I'll do another video for week 3's, my opinions on the companies. And then, yeah, if you did enjoy it, I'll do a bit more research, obviously, into the companies, but I sort of did this one as a test just to see what you thought of it and if people enjoyed it. As you can see, no more companies for next week according to ComSec, so I've chucked quite a few out there. I personally am not too interested in many of them, but yeah, we've gone over them, so if you like them, do your own research, form your own opinion, don't trust me, because I have been wrong. Nuix is probably the biggest example. If you want to see something that fell off a cliff, just look up Nuix. I bought them for an earnings play in Feb, and yeah, they shat the bed to put it nicely anyway. So yeah, if you guys enjoyed it, let me know, and yeah, I'll make sure I'm all more organized, maybe even throw in a few charts on the bottom right next time, and we'll see how it goes. But yeah, thanks for watching. Oh, and thank you for all the support lately. The subscriber count's flown up, and even on Reddit, we've got a bunch more support. So thank you to everyone, and even in the Discord, it's gotten more active and we've got more people talking. So yeah, thank you for everything. I really do appreciate it, and I hope you guys have a good week/weekend. And bye bye.